Hello traders, it's Tirunalpan here, founder of Master of the Markets Illustrates Conference and the Traders Open Day, and welcome to our market update video today on the 1st of March 2019. 3 months already into the year, and how well is all your trading performance going on? We will soon be updating you on how we are doing, but before that, just a short topic that I do want to cover, and the topic for this time is the principles. Now, principles of trading, right? I'm sure you all have seen, for you avid traders and investors, I'm sure you all have read the book on principles by Ray Dalio as well. He goes by these principles that then he deviates his exact quantify rules from. Now, there is, of course, limitations to anything that you do. Quantification definitely helps, it removes discretion. But of course, according to the market and according to the thousands and thousands of permutations that price can have, it'd be good to sometimes always know that your quantified rules are following some principles. Now, what are the three principles, I would say the top principles that we would look into when we are designing our strategies and monitoring their performance? I would say the first principle, what I would look into is stops. Okay, before I enter into a trade, into a turning point, especially these principles are for turning points. Before I enter into a turning point, I see if the stops have been cleared. So, for example, if I want to buy into this position, I wait for selling to come true in this market. So now what happens, traders, when selling comes into the market? All the people who are long before, who got their sell stops, are all being cleared. That's what I mean by the stops being cleared. In a buy position, that means sell stops being cleared. Now, if the sell stops being cleared, then buy orders are being filled, because that's when a seller can offload his position when there's a buyer on the other side. So in that sense, so then I am buying when all the stops have been cleared, and when I want to come in when almost the last stop is cleared, is it not? So I just want to see where the maximum stops would be, and that's where I would enter. Of course, you can't really capture the bottom, but at least it's near to the turning point as much as you can. So that's the first thing that I would do, where maximum number of stops would be. And some of the guidelines that we can share with you is that one place where stops are, which I've talked about as well, is where moving averages are, or is it not, traders? Okay, think about where you place your stops, and then you can reverse um, track on that and find out where the stops will be cleared. So that's the first thing I would look at for turning points, where most of the stops will be cleared. Second thing is I would look for momentum. If something has got to turn, momentum has got to slow down, right? So that's the thing I would do. Now you can see over here, when this turning point came in, you can start to see the momentum was not as strong as before, was it not? All the closes were consecutive, but since it comes to here, you see, look, it's starting to halt, and then it's going up, it's coming down, starting to halt again, and then it's coming back up again. You see, that's how you see if the momentum is going up or down. Of course, if you want to quantify the equation of momentum, I would recommend looking at Perry Kaufman's book on trading systems and methods, where the momentum equation is given and quantified. Okay, and then the third thing, what I would then say for a principle of a turning point, is market exhaustion. Okay, market exhaustion. You see, for example, market exhaustion is very, very clear when you got a very large swing move like that. You see, how long can it keep going up in a straight line? Is it not, traders? Remember, price moves in a cycle. At some point, a turning point must come. So the longer the move, the higher the probability that it's going to turn, definitely at some point. Is it not? 20 trending bars is almost unlikely. Is it not, traders? So that's what you can be looking at. These three principles: stops clearing, momentum, and then market exhaustion. And the market exhaustion parameters, we use quite a lot of parameters, but one thing you can start to look at is the ATR. If it does a certain amount of ATR, look at it to start turning around. Okay, that's what you can be taking a look at. Alright, I think that's pretty much that from me on the topic. Now, swiftly moving on into the performance for this week. Okay, now in terms of the elite room, how did we do? Basically, we had two trades that we took. The first one was on the prime profits setup, where we had a nice, very easy profit over there. at 0.85%. Yes, our profit target was at 2.11 expected, but then according to our exit rules, we had to get out of it. I know the trade did go up much more further as in cable, but do remember it's just not about single trade, it's about cumulative trades. I think this is something that we're going to be talking about in RTCT Live, which is coming at the end of this month. So this was taken on 25th February and a nice move that we took our money on the 25th February itself, just on that day. Now the other trade that we took on smart money just recently, that has just passed by, which was just yesterday I believe, was the dollar Swiss move. Let me just highlight this. Okay, I'll do that in a minute. Now, dollar Swiss move, what we had a -1% hit, and that was actually on the 27th Feb itself. So if you were to take a look at that move, so we were looking to capture that into a turning point. You can see over here. As you can see, the principles, looking at stops being taken out, momentum to slow down, you can see over here, and market exhaustion, but this is in line with the trend. So if I were to delete that, this was the bar that we entered on, this green bar here, and the next bar itself just came down and took us out. Okay, so that's to do with that in terms of dollar Swiss trade that you've just seen over there. So that's that. Now, in terms of euro dollar, yes, we have a live trade at the moment over here. In terms of euro dollar, it's been triggered into the trade, and that's what we have at the moment. Okay, right, and we are short on it as well after an outsider bar, seller bar yesterday on euro dollar. Right, so that's in terms of the elite room, so that's still floating there. So -1 plus our prime profit trade, what do we get there? 0.85. So -1 plus 0.85. So overall in the elite room, that's about -0.15%. Okay, -0.15%. All right. So that's what we got over there. Now moving on to the LTR room. In the LTR room, what do we have? Now, let me just do that very quickly over here. Now in the LTR room, what we have is the money bars trade. The money bars trade, what we have is basically we had -1 and -1 over here, dollar Swiss and euro dollar. So we have a -2% here. Okay, in terms of dollar Swiss and euro dollar. Then in terms of gold bars pending order, which we have just released this, a beta gold bar system. It's a beta version, but now it's a full version. We got 0.19% profit. So when we add that up both together, 0.19, then minus the 2, right, percent, we get -1.81. Okay, -1.81%. All right. Now, -1.81 plus 0.15 minus that, that's about -1.96%. Okay, so that's what we have for this week. -1.96% drawdown is what we got. In terms of pips, I think, let me just do a quick calculation on that. I did forget to do that one. So 7 pips profit here. And in terms of money bar system, what do we have actually, traders? -49 plus 29. So let's say that's -80 minus 78. So -78 plus 7. And then what do we have over here in the elite one? We have plus 74. Okay, plus 74. And then we got minus, let's see, the smart money trade, right? And the smart money trade, what was that about? That what about -47, wasn't it? So -47. So -47 is what we got over there. So what we have here is Yeah, so then what we got is, so yeah, so minus 78 plus 7 plus 74 minus 47 is what we got. So plus 7 plus 74 is 81, and then minus 78 minus 47. And what would that be, traders? Let's see now, right? A bit of arithmetic here for you. So what we got is 81 minus 78 minus 47 minus 44 pips, right, is what we got. Minus 44 pips is what we have in terms of that. So minus 44 pips and minus 1.96%. Okay, so that's a small drawdown what we got for this week. We'll carry on executing the system consistently because of the cumulative runs in the system that will bring it to the positive equity curves. But always keep track of your maximum drawdowns as well at the same time. All right. All right, any other questions at all, please, of course, do contact us and email us. We are more than happy to help you and serve you to get to your peak trading performance. And until the next time, as we always say, stay disciplined, follow your trading plan, and keep trading like a master.